Hi, everyone. Thanks for joining me for this week's mortgage market update. We've got some important developments in the mortgage industry that could affect you, especially as we move into the spring market. From mortgage rates to CFPB updates, let's dive into what you need to know. First, let's talk about interest rates. We've seen rates trending lower over the last few weeks, which is good news as we head into the spring housing market. If we take a look at the bond market chart, you'll notice the upward movement in the bond market is leading to downward pressure on interest rates. This is a significant trend that's been building since February, with a 100 basis point improvement just in the past month. The big driver behind this improvement is the talk of a slowing economy, which tends to bring rates down. In fact, the market is starting to anticipate possible interest rate cuts from the Federal Reserve, as we've seen with the Personal Consumption Expenditures, or PCE index, coming in slightly below expectations. With the market pricing in future Fed rate cuts, we're getting a boost in the mortgage rates right now. Looking at the 6-month trend, rates are still below where they were in September, but the recent rally has put us back at early December levels. This is great news for buyers and homeowners looking to refinance. Bloomberg even published an article highlighting that mortgage rates are at their lowest point in 3 months. We're in a good spot as we continue to rally, but keep in mind the gains aren't always linear. There may be some bumps along the way. Now let's shift gears and talk about what's happening with the Consumer Financial Protection Bureau, or CFPB. Last week we talked about upcoming changes at the CFPB, and since then the confirmation hearing for Jonathan McKernan has taken place. It was quite an event with heated exchanges between McKernan and lawmakers. Senator Elizabeth Warren, who was instrumental in creating the CFPB, voiced her concerns during the hearing. She told McKernan that he had been nominated to lead an agency where, as she put it, Elon Musk has told everyone to do nothing, comparing his role to being lined up as the number one horse at the glue factory. McKernan responded by stating that his focus would be on fulfilling the CFPB's core statutory responsibilities as outlined in the Dodd-Frank Act. There's also been ongoing discussion about whether the CFPB has overstepped its statutory authority. McKernan acknowledged this concern, stating that the Bureau has at times acted beyond its mandate and that courts have agreed with this assessment in several cases. His goal, if confirmed, is to refocus the CFPB on its original mission while reinstating accountability to Congress and the President. Now, speaking of rate cuts, the market is currently anticipating 2 to 3 rate cuts this year. This is a significant shift from what the market was predicting just a few months ago, when only 1 rate cut seemed likely. With the Federal Reserve meetings ahead, it's something to keep a close eye on, as these cuts could further drive down mortgage rates and create opportunities for buyers and homeowners. With McKernan likely to be confirmed, we can expect the CFPB to scale back some of its activities and regulations. McKernan has made it clear that his priority is to right-size the Bureau, refocusing it on its core responsibilities while increasing accountability to Congress and the President. This could lead to fewer enforcement actions and less aggressive regulations of the mortgage industry in the years ahead. We'll be watching these changes closely, as they could provide more flexibility for businesses and loan officers moving forward. With all this happening in the market, there's a great opportunity to lock in lower rates or prepare for upcoming changes in regulations. Whether you're a home buyer, homeowner, or agent, now is the time to stay informed and take action. If you're thinking about buying, refinancing, or want to discuss how these regulatory changes might affect your clients, I'm here to help. Let's work together to make the most of these opportunities. Feel free to reach out with any questions, and don't forget to subscribe to stay up to date with the latest market insights. I look forward to helping you make the right moves in 2025.